Three things you need to know about budget as a REN. The abolishment of RPGT, the Housing Credit Guarantee Scheme, and the Cukai Makmur. Abolishment of RPGT is on the 6th year onwards. I think some of you still remember prior to COVID-19, the waiver of RPGT, we actually have to continue to pay even after 6th year onwards, up to 5%. 6th year onwards, they take away that. But for the moment, this abolishment is only applicable for Malaysian and the permanent resident of Malaysia as well. Second thing will be the Housing Credit Guarantee Scheme, which is the HCGC. It's different from our usual HOC. The details of it is that the government has basically allocated 2 billion. And this, I think, is very crucial to us and very crucial to property buyer. A lot of people actually looking to buy. I'm sure some of you have actually closed a deal, but the deal has to be aborted because the loan couldn't be approved. It's not that the customer cannot afford the installment. It's not that the customer cannot afford to continue to pay for the house. It's just that because of their variable income, especially during this COVID period, the non-fixed income become a hurdle for them to get their loan approved by the banks because they do not have a proof of fixed income. Now, listen to me carefully. Without the proof of income and without the proof of fixed incomes are two different things. So this scheme basically come in as a shining light, a helping hands to a lot of business owners, the gig workers, the IT knowledge-based workers, small business owners, or even agriculture sectors. These people, most of them do not have a fixed income, they have variable incomes. So when they actually go and apply for a loan now, they can actually have government to step in as a guarantor, so that banks would actually provide the housing loan to them and so that they can get their house. Now, the participating bank at the moment is Bank Simpanan Nasional. And hopefully we got more banks come on board as well. Of course, the number 3, the Cukai Makmur is actually the one-time prosperity tax. It's like a windfall tax for big companies. When I say big companies, I'm talking about listed companies who make 100 million profit in a year. So additional 9% tax for companies profit above 100 million. Malaysian company, the tax rate is flat at 24%. All right, regardless how much additional profit you make. But in budget 2022, if you make more than 100 million, let's say you make 150 million, your 100 million will be taxed at existing 24% tax rate, but your remaining 50 million will be taxed at 33%. Actually, when it was this announced, normally you want to see how the market react to any big announcement by government. The first thing we always look at is none other than Bursa. So at the time when they announced the Cukai Makmur, the wow factors is they say is to scare the foreign direct investment away. But within 3 days, Bursa, our Malaysia Stock Exchange, we saw foreign institutions withdrew 19 million. Actually, it's a very small amount. Compared to local actually sold 400 million worth of stock. To say that the Cukai Makmur is going to scare the foreign investment away, it was not reflected in the stock market 1 week or a few days after the announcement. So short-term wise, I would say the Cukai Makmur is the effect is relatively mild because it affects 223 companies and most of them are listed company, and this is going to be a one-time thing. It's not ongoing. But if you look at the long-term wise, I would say that the government suka U-turn policy, anything specific they actually do a suka implementation will have a permanent effect on FDI. So before the foreign company consider to invest in Malaysia, I think as a REN, we should pay more attention to the big picture. Our national debt level to the GDP. National debt level and household debt level, actually for a lot of people, they find it a bit confusing. Okay, I'll just break it down. Household debt. Household debt refers to the debt, the credit card loan, the personal loan, the car loan, the house loan, everything, the student loans that you, me, every one of us owe as an individual, therefore add up as a household, the debt that we owe as a person. This is the household debt. But we look at the government policy, the government financial situation, we always look at the national debt. Now national debt is measure, basically, if a government issue a bond, people who buy the bond from the government, they become a creditor to the government. So when they become a creditor to the government, this new batch of bond, the value will add into the national debt level. Now the national debt amount itself, the figure itself is insignificant. Therefore, we always term it in relative to GDP. GDP basically is a gross domestic product. It's basically a way to measure how productive a country is. But now they raised to 65%. 2 years ago, we have a ceiling. Our ceiling is that our parliament have a ceiling threshold saying that our national debt level should not be more than 55% prior to COVID. Then subsequently, they loosen it. They say it cannot be more than 60%. But now, because we need to take more debt in order to finance the physical spending, the government self-imposed level has now increased to 65%. But even now, from 55% goes up to 65%, Malaysia is not even at the top 20 in the world in terms of the national debt level to national GDP. The next few slides, what I'm going to share with you is what's going on outside Malaysia. First, we have highest ever money supply level. Don't even talk about 2021. Even at 2020, you already know of all the money created, okay, and circulated in the market, 20% in US were created in year 2020 alone. In other words, in year 2020, the whole year has created the 20% total money supply US has ever had. Anything with excess of supply. Basic Economics 101. Anything with excess of supply diminish in the value. When you have more of this thing, the value comes down. Now, the second thing, just now I talk about money supply. The second catalyst, I'm referring to shortage of almost everything. Okay, when I talk about shortage, it's just a snapshot of it, okay? From computer chips, cargo containers, food, building materials, I think everyone knows. Natural resources, I'm talking about fuel. I'm talking about natural gas has increased 500% in Europe just this year alone. The third major catalyst, the labor cost has increased tremendously and we are not seeing it go down. Few of the reasons contributed to the sharp increase in wages or the pay is because workers also facing inflationary pressure. Everything they need to buy is getting a lot more expensive now. So they have every reason, not a standalone by individual or by any industry. I think overall, workers are expecting higher pay due to that. And at the same time, wages are rising, but can they keep up in inflation? When labor are demanding more wages because they are seeing more inflation now, employer will feel the heat, and because they need to pay more to their staff, to the operation cost, they have no choice to increase the price of their commodity.